Yesterday, both the euro and the British pound extended weakness against the dollar, coming under pressure from strong US statistics. The number of Americans filing new claims for unemployment benefits fell for a second straight week. However, data on US durable goods orders turned out to be downbeat. In addition, Fed policymakers delivered speeches at the Jackson Hole Economic Symposium. Some officials said that interest rates had probably peaked. At the same time, many representatives of the central bank stressed the need of at least one more rate hike to combat inflation. Against this background, the greenback gained ground. Today, the Fed's Jackson Hole conference will feature a hotly anticipated speech of the economic outlook by Jerome Powell. The head of the regulator is expected to strike a hawkish tone on monetary policy by mentioning the prospect of further steps to curb inflation. Even if Powell does not signal further rate increases, he will most likely state the need to hold US interest rates at elevated levels for much longer. This, in turn, will lead to a continued rise in the dollar against the euro and the pound sterling. What's more, today's macroeconomic calendar includes data on German gross domestic product for the second quarter of 2023. The indicator is forecast to remain unchanged quarter on quarter. The IFO Institute is set to release its business climate, current conditions, and expectations indices for Germany. These figures are likely to be revised down, which may add downward pressure on Europe's single currency. Also, traders may take notice of the University of Michigan's final readings on consumer sentiment and inflation expectations in the United States. Nevertheless, all eyes will be on Fed members' Jackson Hole speeches as well as a statement by ECB President Christine Lagarde. And now let's move on to technical analysis. The euro is likely to hit a new low. Nevertheless, a false breakout at 1.0777 will create a buy signal. In this case, the pair will enter bullish correction to 1.0804. If the price consolidates above this level and tests it from the top down, the euro will have a chance of jumping to 1.0838 and 1.0875. This scenario is possible if Jerome Powell takes a softer stance. At these levels, I recommend going short on a rebound, counting on a move of 30-35 pips. Short positions at 1.0804 and a breakout of 1.0777 will bring the euro down to 1.0734 and 1.0705. At the level of 1.0705, it will be possible to go long on a rebound to catch an intraday correction of 20-25 pips. Long positions at 1.0734 can be considered only amid a false breakout. After all, a downtrend remains intact, and today's speech by Jerome Powell may cause steeper losses in the European currency. Speaking of the British pound, after a prolonged sideways trend, it finally broke below the 1.2616 mark and settled sharply lower on Thursday. It's obvious that its bearish trend will continue. A false breakout at 1.2588 and 1.2616 will make it possible to sell the pair. Short positions will also be relevant if the price fixes below 1.2557. In this case, the British currency will slide to 1.2523 and 1.2488. At the level of 1.2488, traders are recommended to go long on a rebound in the hope of an intraday correction of 25-30 pips. Long positions at 1.2557 and 1.2523 can be opened only in the event of a false breakout. However, the market situation will hardly change before Powell's statement. Only after his remarks and a rise above 1.2588 one can count on a surge to 1.2616 and 1.2647. In this area, it would be a wise decision to go short on a rebound to catch an intraday correction of 25-30 pips. Good luck and have a great weekend.